Good morning. You're watching Business World Live. I'm Danie, Laurel.
And I'm Jess Delos Santos. It's the start of a new trading day, but first, let's go straight to our top story. The Philippine economy likely contracted at a slower pace in the third quarter on the back of easing lockdown restrictions. A Business World poll of 19 economists yielded a mean GDP contraction of 9.2%, a decline from the record 16.5% plunge in the second quarter. This will bring GDP fall to 8.8% in the three quarters to September, exceeding projections by the government and financial institutions. The Development Budget Coordination Committee, or the DBCC, earlier projected the domestic economy to shrink between 4.5 and 6.5% this year. ING Bank Manila senior economist Nikki Mapa says the Philippines may not recover to pre-pandemic levels in the near term, with potential output fading and investment momentum headed into the wrong direction. He also says the lack of a potent and timely spending plan to counter the economic downturn brought by the pandemic could translate to a 9.8% GDP contraction for 2020. Security Bank Chief Economist Dan Rosas expects a gradual recovery despite subdued confidence and challenges faced by some sectors. He says there's a need to complement existing monetary policy with government spending and a larger fiscal stimulus. The third quarter GDP print will be released tomorrow. The country may likely see stronger relations with the U.S. under a Biden administration. That's according to business leaders and foreign policy experts. After finally notching 270 votes over the weekend, Democrat candidate and former Vice President Joe Biden returns to the White House. During his first speech as president-elect, Biden vowed to act swiftly against the pandemic and work on U.S. economic problems. Economists and analysts, meanwhile, see the U.S. rejoining the Trans-Pacific Partnership trade deal, as well as a Paris climate change agreement under Biden's leadership. Trade tensions with China could also likely ease, bringing more opportunities for the Philippines, that's according to experts. President Rodrigo Duterte has congratulated Biden on the win. Malacanang has also insisted that the Philippines' foreign policy with the U.S. remains regardless of America's leader. Biden has since called for unity and healing among Americans as he takes on the presidency. His vice president, former Senator and Attorney General Kamala Harris, meanwhile makes history by being the first Black and Indian American woman to become U.S. VP. Outgoing U.S. President Donald Trump, on the other hand, insists fraud in the elections and says he will take the matter to court. Without providing evidence, Trump claims he won over 70 million illegal votes and that he won the U.S. elections by a lot. Twitter has flagged these tweets of his as disputed. All right, and even markets are celebrating that election outcome. In a world of unpredictability, finally the bets paid off. Tell us about that reaction.
All right, so Jess, we are waking up to a new era, at least not just in the United States, but across the rest of the world. And you can see my terminal here, how the markets closed over in Wall Street. This is ahead, of course, of a Biden victory. And even you can see this morning that the futures over in Wall Street are already up by 1% in early trading. And this, of course, comes, as you mentioned, investors were putting their bets on a Biden victory as well. And even ahead of this, the global equities were already coming off of their best week since April. They rose more than 7% even ahead of that victory. And why is that? Well, a lot have been looking at, of course, the spending plan, the stimulus that might likely be happening swifter than if President Trump had actually won. And he had already been saying this President-elect Biden in his victory speech over the weekend, promising the swift action in terms of the pandemic. Now, this according to some investment strategists over in the U.S., they're looking at an outcome that Democrats will be retaining control of the House, but Republicans retaining the Senate. Now, this might mean that Biden's proposed tax hikes will not pass the Senate, but then the fiscal stimulus will actually be passing the Congress and the trade wars will be toning down, and that might be boding well for the markets. markets. Now, of course, a lot will now be focusing on how the pandemic will be contained over in the US. You've actually got worldwide cases of COVID-19 now surpassing 50 million. That's been put on the back burner, but now everyone will be focusing on that right now. And the most important thing as well for some investors here is the fact that the elections are no longer contested, it seems, and there's no more delay in terms of the election result, which was what was really jittering the markets. Now, what about the ASEAN region? And I'm just going to pull out the Asia Pacific indices for you guys here so you can see that. This, according to Bloomberg Economics, and you mentioned that already in the banner, they're expecting the incoming new administration over in the US to maintain the pressures on China, which would in turn affect our region's exports and economic growth. But that fresh tariffs would actually be less likely, and this might actually be supporting our growth in the region, according to their view. And in fact, emerging market assets rallied as well in that week ahead of the election result yesterday. We rose to the highest level. This is, of course, developing nation stocks rose to the highest level in more than 2 years. You've actually got equities in their best week in 5 months, and you can see the rest of Asia seemingly celebrating that win this morning.
All right, and we definitely took advantage of that global optimism, but our domestic gain was also fueled by the quarter-on-quarter better earnings. What's this going to be looking like, especially since we're expecting a lot of figures, economic data at least, to be coming in this week?
Okay, I mean, we had a stellar week, if I can say so. We were breaching above 6,600 levels. We're still on that levels this morning. You know, investors and market analysts were just hoping for a 6,500 break, and we went way beyond that. Especially last week, we were having a 5 straight day rally, and last week we were up by 5.7%.
Wow.
This is the highest level we've seen since entering bear market territory in March. I want to actually just pull out the year-to-date chart here so you can see how we collapsed in the month of March, and then we've been trading sideways, and now finally breaking through that seeming glass ceiling. However, it's still not a sure win. You've actually got value turnovers falling by 30% last week, and you've also got foreigners still selling out. So we actually had net outflows last week, despite the fact that the PSEI was rising. Now, like you mentioned, it's not just possibly about the euphoria, let's say, on the markets in terms of the US elections, but also the earnings reports. They're now 85% complete, at least for the biggest index player. So that's a huge sigh of relief for us that have to report this on a daily basis. But, you know, what was really coming out here, according to Trade Asia, is that year-on-year figures are down, and that's to be expected. But the quarter-on-quarter revenues were actually improving. And another thing they say is that this might be a never look back scenario na. And hopefully, you know, worst is over. Hopefully zero lockdowns na. But he did mention that the rise in earnings that we were hoping for in 2021, 20 to 25%, which seems to be what the markets are valuing, is not achievable. And that might mean a pullback in terms of valuations. And this, according to Phil Stocks, the local bourse already rallying for 5 days. We might be seeing a pullback this week. Note that GDP figures are coming out tomorrow. All eyes are on that. Now, just a quick peek on RLC, because they also broke figures yesterday, Friday, which on Friday, which we were not able to break here. Now, their net income for the third quarter was down 78% year on year. That's 717 million pesos. However, like I mentioned, like the other companies, quarter on quarter saw an improvement. So that's up by 40% quarter on quarter. Now, what happened to RLC? Commercial revenues, okay, cut in half, but office buildings, get this, got about 20% of revenues up from last year, and that's supposed to be because of the increased BPO locators actually looking for flexible workspaces. Another one, year-on-year growth, was residentials. That actually grew by 36% in terms of revenues, and that offset the drop in hotels and resorts, which was actually down by close to 50%. So they did say they are encouraged by that. And one other thing on RLC, planning a REIT offering in 2021. So they're planning to infuse what they call significant number of their existing office space buildings. They currently have 25 office buildings in their portfolio. So RLC trading now slightly down to 16 pesos and 50 centavos. We'll have more on properties later on in the broadcast. We've got McCullough of KMC Savills with us. But Jess, you've got a bleaker outlook, however, on two specific things. One, of course, is remittance. Let's kick off with that.
Okay, so this time around, you have a number of remittance players, in fact, more than half of them, expecting declines in transactions, whether it be in value or in volume. This, according to the latest report of the BSP. This is the financial system for the first half of 2020. Wherein they surveyed a number of remittance centers and banks and other institutions that are actually involved in money transfers as well. The study actually showed that 54% of players are expecting a decline in volume and value of transactions. Now, of that figure, 43% are forecasting a decline of more than 20%. In fact, and all the stakeholders that were part of the study here, 75% already reported declines in their April transactions. Now, according to the central bank, the preliminary results actually really showed how much the COVID-19 pandemic has greatly affected remittance channels and affected as well the capacity of overseas Filipino workers to actually send remittances back home. Let's just give you a context, of course. Really affecting that as well is that you now have around 230,000 OFWs being repatriated as of November. In fact, also, if you try to take a look at remittance data here, 8 months to August, that has actually dropped by 2.6% year on year to $19.3 billion. And the BSP is projecting really that there's going to be a 2% drop in 2020 before managing to at least recover by as much as 4% come 2021. So really, lots of things happening in the remittance space, not a rosy picture like what you mentioned here, at least coming from the stakeholders themselves now.
And all eyes just will be on the December, what's going to be happening on December, especially since that's usually the strongest month for remittances. Now, moving on, another one that seems to have a more pessimistic outlook, unfortunately, still is the tourism sector. Despite the easing of restrictions, no big recovery yet.
Not at all. At least if you ask the Institute of International Finance, they are expecting tourism revenue inflows to actually decline by as much as 2.1% of GDP in 2020. This especially as the government struggles to actually control the pandemic. They also noted how the Philippines still has the most infections in the region. At the same time, the most stringent lockdowns in ASEAN as well. They're saying that the weak travel demand is going to persist very much likely, at least up to 2021. That's according to IIF's Yuan Liu. He is an economist from IIF here. He is saying that the weak travel demand will likely persist in 2021 as the world awaits on a probable vaccine. But of course, we do know as well, it doesn't come easy, those inoculations, those shots, at least for COVID-19. And he's saying that the tourism receipts in the Philippines is unlikely to pick up anytime soon, and that the tourism accounted for 12. And you have to, that's very worrying considering the fact that, tourism accounted for as much as 12.7% of the country's GDP back in 2019. In fact, if you try to take a look at last year's figure here, domestic tourists spent around 3.14 trillion pesos in 2019, while foreigners spent 548.8 billion pesos. And according to IIF, the lack of tourism inflows for this year is going to impact the balance of payments. They're saying that the lack of tourism inflows would have effect on the BOP in most affected countries and will put significant pressure on reserves as well. But they're saying it might be mitigated as long as there's a pickup in good balances due to lower good imports. At the same time, better than expected remittances and a strong peso. But like what we reported just now, you have the BSP saying, of course, a lot of the players aren't really expecting a good year when it comes to remittances.
Okay, Jess, and of course, we're not alone here. It seems that the lockdowns and the restrictions to domestic and not even domestic tourism are right now all over the world. Okay, let me just scroll down here to check in on our biggest headlines. The PDEX is anticipating bond listings next year to be at a record high. That's as the debt market operator eyes to launch a digital portal that's before the end of 2020. The PDS issue portal is a digital platform that will allow the electronic submission of requirements for issuers and onboarding of client investors for securities salespersons. It is seen to facilitate more bond listings by simplifying the process for companies and investors. PDEX is likewise expecting to maintain last year's record of 375 billion peso bond listings by the year end. That's on the back of robust issuances despite or amid the pandemic. The local debt market had its 30th listing for the year through Del Monte Philippines on October. That's bringing the total amount of new listings to 335 billion pesos so far this year.
In a bid to curb corruption in the DPWH, Secretary Mike Villar orders all the agency's offices to use and maintain their official websites and social media pages for the disclosure of important procurement information. This includes the live streaming of the department's bidding process or whenever a relevant committee or body is required to convene or meet. The department order provides that the Bids and Awards Committee shall authorize observers to monitor proceedings online. This as long as observers do not have direct or indirect interest on the contract to be bidded out. Late last month, President Duterte issued an administrative order directing government offices to avoid irregularities in their procurement process in the interest of transparency. We'll have more of the news when Business World Live returns. Stay with us here on One News.
You guys are back watching Business World Live. The markets have been pricing in better quarter-on-quarter results, but it's the worst over as well for the commercial property segment. Now, here to share with us their third quarter roundup, we have with us Michael McCullough, Managing Director of KMC Savills. Good morning, Michael, and welcome to the broadcast.
Good morning. Thank you, Danie. Thank you, Red.
Michael, let's kick off with the broad property sector before we dive into the office space and before we dive into Metro Manila. Tell us about the third quarter in a nutshell. I mean, everyone's expected that to be lower year on year, but quarter and quarter, have we actually been seeing improvements?
Well, we haven't really been seeing improvements, but we haven't seen the market fall out, which is also equally good. There's been a few submarkets such as Ortigas and Pasay area, which have a bit more exposure of upcoming supply, and they also have the exposure to the POGO sector, which has been hit very, very hard. So those areas we're watching very, very closely. Traditional CBDs such as Makati CBD has held up strongly. Even Alabang has held up well. Quezon City has started to see double-digit vacancy rates. And overall, Metro Manila's vacancy rate is still a healthy single percent vacancy rate. So we're watching the market very closely, particularly the office market very closely. We do still think that the worst is yet to come, particularly over these next 6 to 9 months.
Okay, so the worst is still to come, but let's talk about specific segments here, Michael. You've actually got some bright spots like residential, seemingly still holding their heads above water. Tourism, as Jester just reported on, not looking very good, and that's going to take a while. What about commercial? I mean, like you said, worst is still yet to come, but is that related to just the lockdowns, the restrictions? Is that related to waiting on a vaccine, or is that related to longer, pain that we're seeing ahead in terms of people really shifting their behaviors when it comes to workspaces, starting to work from home, starting to work in flexible offices?
Yeah, I think there's probably three things that are putting pressure on the commercial real estate market. One, work from home. Obviously, we're all on a home internet connection, talking to each other. We're not at the studio anymore. We're not taking transportation. We're not going to coffee shops. So that's putting a lot of pressure on both offices and the retail sector, F&B. Number two, obviously, the pandemic is trying to keep people from mass gathering, such as in office spaces or tightly enclosed call centers. And then number three, work from home is a real competitive advantage for some companies, and they're starting to see the savings for having their employees do that productivity from home. So it's really a paradigm shift. Yeah, the pandemic is here. It's encouraging employees to work from home. The office rents have not gone down enough to encourage people to take long-term leases again, and we won't see this play out until people start coming back into the office in the next kind of 6 to 9 months.
All right, Michael, Jess here. From segments here, or at least particular segments, let's focus on areas here. You did report, of course, occupancy in Metro Manila has been deteriorating at least for the second consecutive quarter here, with vacancy rate as well seeing spikes rather. Question is this also the same scenario outside Metro Manila?
Actually, we've seen some peaks of interest in areas such as Clark or say Alabang, because as employees go back to their provinces and out of Metro Manila, companies want to be closer to where their employees are. They don't want them commuting as much. So we talked about it a lot, the home, hub, and HQ strategy. Some work will get done from home. Some will get done nearer to that employee's home, and some will still get done in a CBD location. So that is a one little bright spot that is keeping some provincial landlords happy.
Mm-hmm.
Cebu, has some unique challenges in terms of the amount of inventory that's coming to the market, and the demand just isn't there. And obviously, Davao is going to be suffering from being disconnected from kind of everything due to all these flights being shut down.
Mm-hmm. Is this something that you can quantify for us, Michael? Like we're talking about Clark, especially, of course. How's the level of pickup there when it comes to these take up?
So there's, I think there's two sectors to watch, because there's the POGO sector, which has a large exposure to Clark, and those are obviously affected by some of the government's efforts to increase the taxes, and that's put a lot of pressure. We've seen a couple of Subic Bay locators mention that they'll be pulling out, but as office space or contact centers and BPOs, APOs has held up quite well.
Can we talk about Metro Manila specific areas here, as per your report? So you've actually got, ahead of this pandemic, key cities like BGC, for example, that seem to be rising and even catching up to the rents that we were seeing in the Makati Central Business District. Are you seeing a shift in terms of businesses relocating within the Metro Manila region as well? And which ones are the brighter spots?
So I think if you look back at the kind of home, hub, and HQ model that I was talking about earlier, many companies had their HQ in Makati. It was still too far from employees, given that there's no public transportation, there's no buses. Ankas just kind of came back, I guess, in the last week or so. So they are looking at expanding out of just Makati. They want something, say, in Ortigas, that's more accessible to their employees in east or north or something. So yes, we are seeing companies relocate to a portion, at least, of their office requirements to places like Ortigas, and that's roughly in the 20,000 square meter mark or so. So it's not a lot. Volume down, volume is super low. It's worse than what the global financial crisis was about 10 to 12 years ago. So, yeah, it's highly impacted the office demand sector. Now, you talked about Robinson's Land Corp earlier, that the office market was a bright sector for them. And that is true because many of their occupiers signed 5-year leases. Some of them are strong enough to weather the storm and will continue to pay rent. Robinson's had some exposure to POGOs, a little bit less than some of the other major landlords. So they'll still be feeling some pain, but hopefully less.
All right, Michael, you did something you already touched on. Like you just did say that landlords are expected to feel the pain of the impact of POGOs leaving. But do we expect that to be tempered somehow by some level of growth here from the BPO sector?
In a normal scenario, like a year ago, we were kind of playing war games with the scenario of POGOs leaving, and we said, you know what? In 18 months, every single call center BPO would have absorbed all of that vacancy. Mm-hmm. But this is new world, and work from home is a highly disruptive thing for the commercial property market, and a lot of us don't believe it works or works as well. And I think there is some truth to that. I do believe more and more companies will slowly bring their employees back into the office, but it's not going to be overnight. And a large portion of work can be done from home, which is highly efficient use of commercial real estate.
Michael, last question before we let you go. Do you see some players that are actually better positioned here? For example, as you mentioned, RLC, and in terms of the less exposure to POGOs, or those actually tapping into REITs. Is that something that you feel might actually be buoying the sector in the future?
Yeah, I think the developers that want to put their assets into REITs, they typically have a pretty good portfolio to present to those investors that want exposure and want those tax efficient dividends. So the sector that has really, I think, been lived the best through this whole pandemic was the IT BPO sector that was spared from having to be shut down at all. President was very generous with them. They never stopped call centers from operating. They allowed them to do 90% work from home. And that was really, really important for that sector. Again, there's about 4 sectors that power this economy. You guys already talked about tourism, which is down big. We talked about OFW remittances earlier, which has kind of held up somewhat well, but now I guess the forecast is for it to drop again. BPO revenues, and the 4th for me is POGO. So POGO's almost gone. BPO has suffered some losses this year, but has been pretty resilient. And OFW remittances have been pretty resilient as well. And obviously tourism is down big.
Okay, so thank you so much for that. Those insights, Michael. It seems that there might be more pain ahead, but there are still, of course, some bright spots here when we're talking about office and commercial spaces. Thank you so much, Michael McCullough of KMC Savills.
The real bright spot is in residential, which has a lot of volume still. So that's absolutely one thing to look forward to.
Thank you, sir.
Thank you, Michael.
Thank you for having me.
Right, guys, quick check on the markets before I let you go. We are still trading above 6,600, but nevertheless have a pullback. We are down by 0.2%. Very quick check on which ones are the movers here this morning. You can see on my terminal here, Jollibee up by 1.9%. Wow, we'll be having to check in on what's driving that, but you've also got PLDT up by 1.8%. So really mixed picture here in terms of the big gainers, but you've actually got RLC down by more than 2%. We had just, reported on that, but of course they had also been rallying last week together with the rest of the local boards. Now, I just also wanted to highlight one specific sector, and that is the P-mini in the Bloomberg. That is, of course, the mining and oil counter, which is actually bucking that sell-off or mini correction, so to speak, of the day. You can see the mining and oil counter up by 1.1%. Now, this amid the fact that they're actually calling for, or opposing rather, the call for more royalties. So this is from the Chamber of Mines of the Philippines. It's the country's biggest group of miners. They are opposing the recommendation of the Department of Finance to impose the royalties. So they're actually, the Department of Finance has actually asked for additional earnings, fiscal earnings, by letting the miners actually pay some taxes over that, and they are trying not to do that. Now, you actually also got Nickel Asia reporting their net income. Get this, Jess, we've been reporting downward trends, but Nickel Asia's 9-month net income is actually up by 20%
Wow.
year on year to 2.3 billion pesos. That's on the back of their 9-month revenue, up by 11%. And this, according to their president and CEO, Martin Zamora. Strong rise in ore prices during the third quarter was, get this, more than enough to offset the drop in the shipment volume during the first 9 months. They're cautiously optimistic. So very exciting times, at least for the nickel miners. You've got them actually rallying this morning as well. Nickel Asia up by 0.7%. And that's the first look into the business day. Today's Monday, November 9. I'm Danie Laurel.
Catch us again tomorrow at 9:30 a.m. I'm Jess Delos Santos. We are One News.